So there's a great panel put together, but as you're asking, one thing that's not in my bio, but that many people probably already know, is that I'm a runner who likes to run in difficult terrains and around mountains or on other up places. And as an example, last year I did a tour in a weird country that many people will probably not locate on a map, which is Kyrgyzstan. So I let my other panelists, co-speakers, introduce themselves, and maybe we can start with maybe by alphabetical order with Andrew.
Hi, can you hear me?
Yes.
You can. I'm having a bit of trouble showing my face at the moment, but I will be with you soon, I'm sure. I remember I was on this panel, I was on a similar panel last year, and I was told beforehand, make sure you got a piece of information to share. And I totally forgot, and I forgot this time round as well. I guess, let's keep it topical on lockdown. I was never that much of a fitness fanatic, but as we went into lockdown, like many people, I thought, well, I better get out and do something. I started running in the mornings, and sadly, I've become a little bit addicted to that. And I sort of tried, if I don't get out at least 2 or 3 times a week, I end up getting a little bit grumpy, and I didn't get out this morning, so I was a bit grumpy this morning. But I'm in a much better mood now. Once I get my audio going, I'm going to be in a much better mood, I'm sure. There we go.
Thanks, Andrew. Burcu?
Thank you, Paul. My name is Burcu Menteşoğlu Tuncer. I have a long name along with my organization from Global Legal Entity Identifier Foundation. And yeah, I joined GLEIF 3 years ago, and I'm responsible for public consultations. And I also manage globally important financial institutions group. Again, another long name. So maybe you can remember me with long names. And I'm so pleased to be in the panel today.
Thank you, Burcu. Emma?
Hi, good afternoon, everyone. My name's Emma Kaliamaki. I'm the Managing Director of ANA, which is the Association of National Numbering Agencies. I'll have a competition with Burcu on how many long names and acronyms we can bring into today's panel. And I'm also the Managing Director of the Derivative Service Bureau, so also the DSB. And now the entities who form our association and the DSB, we're responsible for the provision of ISIN, the International Securities Identification Number, and the CFAI classification of financial instruments, and the FISN, which is the financial instrument short name. And all 3 of these being key elements for regulatory reporting across a broad range of European regulatory regimes. And they also tie into the LEI and providing a linkage from ISIN to LEI to help have that broader picture of your issuers and issuances, which has been also quite important with recent regulations such as SFTR.
Thank you, Emma. So last and for this panel, Linda.
Good morning, good afternoon, depending where you're located. My name is Linda Coffman. I am Executive Vice President at SmartStream Technologies. I head the Reference Data Utility Business Division. I'm really looking forward to today's panel. You'll probably hear my little added info that's not in my bio, which is we are obsessed with our animals, our dogs in our house. So I apologize ahead of time if you hear them. But other than that, I'm just very happy to be here today.
Thank you, Linda. Now maybe just a small word for the delegates. As you have heard, we have a group of experts on the panel, so don't be shy and raise your questions through the chat, and we'll do our best to answer all of your questions in the time we have here. So we have a great set of content that we will share, talking about reference data and standards. So maybe to start with, as many of you may not be familiar with the process, I wanted to give a short word on how in the ISO world standards are developed. You all know, you are all using standards, but maybe you don't know how they're developed and how they keep up to date so that they keep being in line with the market needs. So just a short word then. The development in standards is clearly a volunteer work where the subject matter experts are appointed by their respective national standards bodies in a given industry, as standards are developed in a wide range of industries. And if I take two examples, in the UK, the national standards body is BSI. If we take Germany, it's DIN. And in each respective country, there is a national standards body that will liaise with the trade associations or other bodies in the country to appoint volunteers to contribute to the work of developing standards. So when there is a need to develop a new standard or to revise, for the matter, an existing standard, a project team is put together with a scope and a brief, and that working group will then, together with the committee in which the standards are developed, appoint a convener and reach out to the national standards bodies with a call for experts to contribute to the work. So the work of developing a standard consists of coming together in a way of aligning requirements, sometimes compromising, in order to draft a proposal for a new standard. And there may be successive drafts, but in essence, the drafts are developed and are then reviewed by the different committees. And again, the national standards bodies will reach out to their local communities to provide input, to raise questions, or contribute to that effort. And ultimately, after several potential review cycles, there is a process of approving through voting that the standard is final, after which it is reviewed for consistency within the ISO Central Secretariat, and then finally published on the ISO website, which is www.iso.org, where you will retrieve all standards that are applicable in the financial industry, but similarly elsewhere. So that's in a very short nutshell how this process works. And if you're interested to contribute, well, please make sure that you reach out directly or through your trade associations to your respective national standard bodies in the countries where you are. That's briefly from my part. And the first questions that I would like to ask the panel is, can you give us some status? What's the current status of some of the standards that we are using? And I will start with the ongoing revision of the ISIN, the standards for securities identification that is currently in the process of that revision. Emma, can you give us some information on that?
Yes, most certainly. Thanks a lot, Paul. So industry are currently working under the 2013 version of the ISIN standard. And so as part of, as you were just talking about, the ISO development cycle, all standards go through or are proposed to go through a systematic review at a 5-year point. So the ISIN standard at its 5-year point, it kickstarted this systematic review, and that is we're in the closing stages of the review of the ISIN standard at present. Now, the changes that have been incorporated into the ISIN standard are nothing really revolutionary. ANA is the registration authority for the ISIN standard. So one of the roles of the registration authority is to ensure the ongoing adoption and implementation of the standard during those systematic review processes. So we do have ISIN guidelines which help manage scenarios that exist outside of the ISIN standard. The standard itself is a minimum set of data requirements or minimum requirements for the provision of ISIN, which is why the role of ANA is so important in coordinating the efforts of the national numbering agencies. So on a global scale, we can implement aspects that may need to be addressed between the systematic reviews, or between the publication of the final versions of the standards. Now, within this latest version, there are a few clarifications that are included that really don't impact change or impact to the user community, such as ensuring everyone is aware that the ISIN standard relates not only to financial instruments, but also to referential instruments. That maybe wasn't as explicit as being made within the current proposed version of the standard. And there's also been improved language around the referential instruments. So to ensure that the coverage for benchmarks and indices, for example, is very clear within the standard. And that's been quite important given the role, given the recent benchmark regulation coming into effect, but also around the reference rates and the changes. So knowing they fall within the scope quite clearly of the ISIN standard was an important clarification to make. There's also been the inclusion of OTC derivatives. So whilst everyone may be aware of the Derivative Service Bureau coming into effect and assigning ISIN, CFAI and FISN for OTC derivatives, this was not in the standard. So again, there's no impact on end users with regards to this inclusion in the standard because it's already in practice today, but it does formalize the role of OTC or the scope of OTC ISINs and OTC instruments being within the ISIN standard. Another important inclusion is the LEI. So as I touched on in my intro, that relationship between ISIN and LEI is paramount and has been something from a voluntary adoption point of view that we've been focusing on with GLEIF over the last couple of years. But having it formally adopted within the standard means that there is that relationship that is mandated. Now, Anna has been encouraging and has included the LEI within the ISIN record for several years now. So again, from an impact or implementation standpoint, there's minimal impact because we have already catered for it from a technical viewpoint. It's more around ensuring the workflows and the broader adoption of all the NNAs are on board to encourage the continued assignment and linkage between the ISIN and the LEIs, and that becomes a mandate essentially once it's in the ISIN standard. Now, there is also the proposal and inclusion of the issuer branch and parent LEI. Now, this will have a slightly greater impact because that is not currently catered for within the ISIN record. So we will need to look at both the technical and the operational changes to cater for inclusion of those aspects. Now, with regards to maintenance of the ISIN, language has been included to capture an old and new ISIN as a result of a corporate event. Now, it's important to highlight that the majority of ISINs or of NNAs do not assign a new ISIN as a result of a corporate action. But this request was primarily driven by the US market, as this is a market practice within the US that an ISIN would change as a result of a name change, for example. So again, there will be an impact. This is of benefit to the market, obviously, to be able to see an old and a new ISIN linkage. But from an implementation point of view, there are changes that do need to be made in order to cater for that. Now, with regards to the scope of the ISIN, as I had mentioned, we are talking really about a minimum requirement of what's in the standard, but there's been further clarification around what falls into the other financial instruments section of the standard. And so this has been opened up to cater for emission allowances, carbon credits, and baskets. So all instruments that are more familiar to us now that weren't in the original version of the standard, or the 2013 version, so we're catering for those. And also talking about broadening of scope, there's also been language to clarify that ISINs can be assigned to financial and referential instruments irrespective of the technology that they are being traded on. So that includes tokenized instruments. Now, the reason that was quite important is because given the emerging industry or asset class of tokenized securities and digital assets, that having an understanding of what falls within the scope of the ISIN standard is really important. As we know, there are financial instruments being assigned today, and similarly, where there are digital assets such as cryptocurrencies that may need to be referenced as referential instruments. It was important to ensure that the scope, it was clear that the scope of the ISIN standard does allow for that. Now, many of you might be familiar that there is another ISO standard being developed, which is the Digital Token Identifier, so the DTI. But it's important to note that while there is an overlap in scope, as in an ISIN can be assigned and a DTI could be assigned potentially for a token that is a financial or referential instrument, that the the purposes and the data elements associated with each of those identifiers are quite different, where the DTI is focusing on the technical aspects and the DLT on which that token relates, whereas the ISIN is relating to the asset and the characteristics of the asset themselves. So they're really quite complementary in nature. So having that scope clarified within the ISIN standard is quite key. Now, when we talk about the timeline, the new version is likely to be published by the end of 2020. So we're just moving into the final DIS publication stage now, given that the comments on the original DIS ballot were quite minimal. So that will be quite positive with regards to its implementation. And then once it has been published, Anna will work with the NNAs and ensure that we have a implementation plan, and those details will be made publicly available. But as I mentioned, we anticipate the impacts to be relatively minimal, more so a couple from a technical standpoint that need to be implemented and those operational workflows.
Thank you, Emma. Also, maybe just a brief word on another standard which is being revised, the classification of financial instruments, the CFAI Standard. Can you briefly also let us know what the status is there?
Yeah, sure. So with the CFI, actually, there was a revision that was published in 2019. Now, with regards to impacts of that revision, the changes were only related to OTC derivatives. So when we're talking about impacts, it is limited to OTC derivatives, being it's only the DSB as the numbering agency for OTC derivatives who has to implement those changes. Now, although the changes that were made are considered backwardsly compatible, when it came to the analysis and understanding the implications, there are still some significant changes. So we're currently working with industry stakeholders, so the regulators, as well as end users and through our product committee to ensure that there'll be minimal downstream impact, or at least a coordinated approach to that downstream impact, given that there will be roughly initial analysis shows roughly around 10 million instruments that would require a change due to a name change of an attribute, and around another 150,000 odd sorry, excuse me, that have CFI 2015, which are not compatible with this 2019 version of the standard. So as the DSB has never previously amended an OTC ISIN record, we've worked on the basis that if there is a change, a new identifier is required. So we're having to take a different approach to the CFI change. And so it is really important assessing the downstream implications and working with market participants and regulators so we have this coordinated approach. Now, just separate to that, I'll just quickly touch on the CFI 2020. So following the 2019 version, there has been another update, which is a 2020 version, but this has not at all touched on the code list within the standard. It's primarily focused on moving that code list or externalizing the code list to ensure that we have a machine readable and easier accessible version of the standard. Anyone who is familiar with the CFI standard will know today that you've got the code list embedded within a paper version, a hard copy of the standard, which makes it difficult for implementation. So moving to an electronic format is definitely the way forward. And in order to complement that, a maintenance agency is being introduced, and they will then be responsible for maintaining that code list, similar to how the currency and country codes are maintained. And so that will be a really positive move with regards to accessibility and availability of the CFI standard going forward.
Thank you, Emma. So as you can hear, there's a lot of work ongoing on updating the standards and making sure that they still fit with the market requirements. Burcu, can you tell us what's happening with the LEI standard recently?
Yeah, sure, Paul. Our last review was last year. I mean, the regular review was completed last year, so it's over. But this year, in August, actually, ISO had published the revised LEI Standard 17442 standard, which allows now certificate authorities to embed the LEI in digital certificates. And this is quite an interesting development as the integration of LEIs within digital certificates offer multiple benefits for certificate owners and users. Today, I mean, today, the current system is that there are digital ID systems, and they based on varying standards, and keys and encryption are based on legal entity names, but not unique identifiers. Then we all know that entity names can change over time. And then this link is not solid as it's supposed to be. So with the LEI, we believe that first, legal entities who are having multiple certificates can link their different certificates through the LEI and so facilitate their management and data aggregation. Secondarily, entity reference data is included in certificates such as name, legal address, and headquarter address are often embedded in text strings and that are proprietary to the issuer, and manual checks are required to verify the data accuracy. And with the LEI, since these data fields such as legal entity name, headquarter, legal address are already in the LEI reference data, and freely accessible on global LEI repository, this would really reduce the burden on certification authorities to verify and make the manual checks on a constant basis. And lastly, I think another important aspect is that once there's a change in digital certificates, such as legal entity is the same, but they change the name, normally they are supposed to revoke the digital certificate as well. But with the LEI, since these changes can be reflected in the LEI reference data without a need to revoke the certificate, digital certificate, the certificate can still show the most up-to-date information, and then there will be no need for revocation. And in reality, most of the entities do not revoke once there's an update, but they just wait until the expiration date of the certification authority, which means they bear with the outdated certificates. So we believe that particularly in after the COVID-19 world, as everything is digitizing on a fascinated pace, LEI embedded digital certificates will be a new norm.
Thank you. So that's then a new or a different use case for the adoption of the LEI. And there's a question from a delegate, which somehow ties to this, which is when people are asking for an LEI and they're asking it on the trade date, which is maybe too late, as by now most of the people should have asked for having their LEI, and more use cases will help for that, obviously. But what's your view when the LEI is asked late, i.e. on the trade date, and it takes 24 or 48 hours to get an LEI, the firm that needs to report its transaction will have its reports rejected because there is no LEI yet on the GLEIF website, or there is no LEI yet available to put in the report.
Exactly. I mean, there are different LEI issuers working in different phases. So I think most of the LEI issuers are really trying to generate the LEI within 24 hours. So my recommendation to all entities to move a little bit early before their trading day, and they can check GLEIF website and compare LEI issuers service deliverables. As I mentioned, it also depends on the complexity of the client. For some entities, we know that there are some issuers, they issue the LEI within a few hours because they are using API, and these APIs are connected to business registry, and the entity does not have direct and ultimate parent information, which requires LOU to make the investigation. So for rather simple entities, I would say the processing time is rather fast. But for complex entities, generally, indeed, it can take some time. So my recommendation would be to move a little bit faster.
Thank you. I hope that addresses the question that was raised. Now, we've heard what's happening with the standards themselves. Now, in the context of the regulatory reporting, we've seen that the usage of standard of reference data. What have been the main challenges in applying the data standards recently, or with the regulatory reporting? And maybe to start, maybe Linda, what's your view on that?
Hi there. So there have been a lot of challenges with the recent regulations, but I think that I'm stating the obvious here, but the challenges tend to fall into two pretty large buckets. One is the identification, and one is the classification of products. Both are age-old issues, but with an increase in digitization, which was just mentioned, comes an increase in the demands for standards to manage these use cases to a high degree. By far, the most common use case that is presented to RDU, at least, is based on the concept that two systems are trying to communicate information about a security, and they need to know that they're both talking about the same security. And so that's in the identification bucket. And whether it's two internal systems at a firm, or a firm trying to communicate to an external system. And it seems like such a basic concept, one that is in present day shouldn't be an issue, but it is. And so for service providers such as RDU and others, I think we are asked to provide cross-reference between proprietary identifiers often, in order to, for the regulatory arm of an institution to be able to talk to the reference data, division, or the pricing division. And so adopting an industry standard is so impactful. And this was very evident with the adoption of ISIN and MiFID II. I mean, it really, we saw, at least especially in the derivative space, such an increase in the amount of instruments that could be more readily and automatically cross-referenced, that it's clear that standards have a positive impact. And then as for classifications, I don't need to tell this audience that it's challenging. Firms are challenged with the fact that each regulation calls for a different classification. And so what we've found is that the CFI code, which was just spoken about, is the basis. So I can't tell you how many spreadsheets I saw in 2017 that probably led to a lot of gray hair when everybody's getting ready for MiFID, where there was a spreadsheet to try to get to the RTS2 classifications from MiFID II, and it all started with the foundation of CFI code. Yes, there are gaps, and it didn't check all the boxes, but it was where everyone started, no matter how many spreadsheets we saw. And so I think that, standards are at the core of everything, and the more that we can adopt, the more that the standards become reflect what's going on into the market and move along, like we just heard, the better it is that we can all have our systems talking together, and that digitization that was just spoken about, plays a big impact on that. Everybody's moving towards, automation. And so in the regulatory space in particular, I think that, standards are the way that we can move forward.
Thank you. So in that context of digitalization and adoption of standards, Andrew, can you tell us how you see those challenges and how you see that the evolution in there? Yeah.
So I don't think anyone's really going to argue that standards and harmonization is good, but we've got to be cognizant that trade reporting has been in place for quite a few years now. Reporting systems and processes are pretty well established across all the reporting firms. So introducing changes to logic, even though it's for the greater good and the long-term benefits, is going to create challenges in the short term, even if we agree with what those changes are. And I don't think that should necessarily be underestimated as to the impact it can have on firms having to implement these new changes. We've always got competing priorities. That's not going to change. But there is definitely, I'm seeing it at ISDA, I'm seeing it in other forums, there is a change in mindset with a move by the industry at large, moving towards committing the time and committing the resources to developing and applying these new standards. It's evident that you can link up one standard can benefit not just one regulation, it can benefit all your regulations throughout the globe. It makes it a lot easier in the long term. It really strips down the amount of resources you need just to keep the lights on for reporting. So you know, it's always been a struggle with competing with a new or an update to a regulation. And I say we've got plenty of updates coming over the next few years, and that is a challenge. But the industry are moving concertedly towards taking that challenge on, I think.
Paul, do you
Thank you.
mind?
Yeah. Yes, go ahead.
I think I really support what both Linda and Andrew have said, and I think when we think, and through the other sessions I've heard today, you know, talking about the importance of data quality and data alignment through the trade life cycle is essential, and we all know how important it is and what a fundamental role standards play. But they can be, you know, even standards can be impeded by issues such as the interpretation or the availability and accessibility. And it's these challenges that we can only address once we're in motion. You know, all in theory and talking about the adoption is great, but it's only once we're in practice and we have the use cases and you see them based on the volumes you receive as well. Can we start addressing them? On the interpretation issue, for example, we come across with regards to CFI, I can say primarily this will be debt instruments where some jurisdictions may have a different legal interpretation. So an NNA is then bound to say a debt instrument, for example, is a money market instrument if it's under 365 days, where actually it's not, but they're forced to say it is. And then this causes a query because another NNA is following the CFI standard and classifying it in that way. So we're starting to see those examples pop up. And I think it's important to be able to address these through that interaction that we have, but we need to see the examples and we need to start using the standards in earnest in order to understand how they continue to evolve and change. And then I think as well on the accessibility and availability of data, and it's been touched on as well today, the third country issue and how there's just a general lack of understanding or knowledge in the jurisdictions that do not fall within the reporting regime, for example, understanding the implications for those firms within the EU who have to report. And really within ANA, we do try to really encourage and ensure that we are making aware what the requirements are and the implications. We have already started to see improvements with the CFI coverage from third countries. Canada, for example, is one country that we get a lot of inquiries about. And although it is slow moving, their CFI coverage in the last 4 months has gone from 0 to 16%. Now, it's still not great, but we can see that it's slowly building. And hopefully through this use and the feedback, that continued adoption and growth will continue. Because that's standardization, obviously, it's to get that consistency is the only way really that we can start to refine and improve the processes around the assignment rules.
So we hear that the adoption of standards is growing through mandates, as in we've seen certainly in Europe, but elsewhere as well, that in the reporting requirements to have consistency and harmonization, the regulators insist on the usage of data standards. They are mandated, and any regulation in Europe at least will make reference to the ISO standards. Can you let us know here what's your view? How has that modified the adoption of standards, maybe in the number of codes issued, but also how that works beyond the pure compulsory usage? Do we see in the industry what's your experience in the usage of those standards beyond the reporting regimes? Emma, maybe while you're there, and then Burcu.
Sure. So I think what we have definitely seen is that regulation is the driver. And as Andrew was talking about, that the approach that's taken, we're starting to see now that there is more of a strategic vision being placed on how to utilize standards beyond just the regulatory drivers. But really the initial adoption and focus has been around meeting regulatory reporting needs and what do we need to do. It's more from a tactical positioning to get across the line today, and not really understanding how these standards can be leveraged and what benefits can be used beyond the regulatory reporting. Now, CFI is a great example of that, where CFI has been around for 20 years, but it's only been in the last few years that it's starting to be used much more vigorously, and that is the driver has been regulatory mandates. But we do see that that general ability to aggregate data using the CFI goes beyond what you need to do for reporting. ISIN, on the other hand, has been used and has been ingrained in market infrastructures and processing for many years, and we don't even think about it really anymore. And with regards to the accessibility and availability, from an identification point of view, it's very well known and ingrained in lots of processes that are beyond what's needed for reporting. And it's now we're starting to see it mandated in more regulation, which complements its already existing use. So that's great. With the ISIN and LEI, we know that there's broader use beyond the regulatory mandates, which is why between ANA and GLEIF, we started the initiative of making the ISIN to LEI linkage mapping available, so it can be used beyond just those regulatory reporting needs. That initiative has been hugely successful. At the moment, we have 26 jurisdictions who are covered by the initiative, and that is with providing 5.3 million ISINs across 71,000 unique LEIs. And we are encouraged, we have more NNAs in the pipeline, and that initiative is purely on a voluntary basis. As I mentioned, LEI is not part of the ISIN standard up until this point, but knowing how important it is for industry to use and that the benefits they can derive beyond the regulatory function, but albeit most of them are probably using it for regulatory reporting needs, but having a freely available source of this ISIN to LEI data, we feel is one way that we can assist industry to adopt and use the standards beyond the regulatory needs that they have today.
Thank you, Emma. Burcu, you would like to add something to that?
Yeah, sure. I definitely agree with Emma that regulatory mandates are the driving force for wider adoption of standards, including the LEI. And we also see that, for instance, in the European Union, regulators acknowledge that there are some data gaps for certain reporting regimes, such as alternative investment fund management reporting regime in EU. And now ESMA suggested that in the review of AFMD reporting regime, the LEI should be mandated. So we know that with SFTR in October, the funds and insurance companies are also in the reporting obligation scope. So it could be interesting. And the more we close the gap in the regulatory reporting regime, the more it will be useful for the industry, that's for sure. But as GLEIF, we also try to engage with private sector directly and create different use cases that they can use the client identification. And one of these use cases is actually the client onboarding. And we created a new operating model. It's validation agent model. So we engage with financial institutions to test this idea if they, in collaboration with an LEI issuer, if they can issue the LEI to their clients at the onboarding stage. So if these pilots prove to be successful at the end of the implementation, we hope to see that the financial industry would embrace the LEI and of course also the other international standards on a more voluntary basis, independent from the regulatory requirements. And one of the, I think, important aspect is that Bank of England, for instance, highlighted that for post-trade reporting to be successful, we first need to make sure that pre-trade data fields and standards are correct and are in place. So, and LEI is one of the non-economic data items that is collected as part of pre-trade. So we believe that more and more usage of LEI in client onboarding can also help to standardize and data quality in post-trade activities.
Thank you, Burcu. And in that context, in your Linda, in your experience that you have with talking to the reporting firms and looking into helping them in the usage of the standards, can you share some of your experience in there?
Sure. I mean, I think we're all saying the same thing about there's no denying that standards help data quality for sure. But to go back to Emma's example about the different CFI classifications coming from the different jurisdictions, if those CFI codes were being used to drive RTS classification derivation, as I spoke about earlier, and ultimately maybe one CFI classification leads to an instrument being classified as liquid, and one leads to an instrument being classified as not liquid, the reporting is going to be looking different. So when you talk about transparency calculations and MiFID and volumes being published, and you have people reporting differently because they're really basing it on that underlying CFI code. To Emma's point, the more that these things come around, the better. So we're taking the first step, and the standards are helping immensely with the data quality, like I explained before, with communication between systems. We have trends that we monitor all the time on cross-referencing, and it's just definitely we've seen an uptick. So all of that is good, and it's the first step. And I think that once the standard is used in a new way, for as Emma was referencing with CFI, and we work through all of the kind of outliers, it just makes it that much better. And so we are seeing that when we have issues or when our clients have issues, it generally is because of these type of outliers, and so we help them work through it, of course. But I think that it just shows how much more people are becoming dependent on the standards in order to make everything, the whole decision tree of the regulatory reporting and what they report and what they don't report. It just makes it that much more dependent on the standards.
Thank you. To the delegates, we have just about 10 minutes to go with this session. So if you still have a burning question at your fingertips, now is the time to raise it through the chat button. And in the meantime, I then have a question for you, Andrew. So in the regulatory technical standards are making reference to data standards or to messaging standards. What's the relationship? How does that work together? How ultimately are things like the common domain model that you're working on, or other standards like maybe ISO 20022 that I could talk about? What's the relationship between these and the data standards that are referred to in the RTSs that are produced by the regulators?
Yeah, great. First of all, you can hear some music in the background. My daughter's just chosen this moment to practice piano, so you might hear some background music while I'm talking. So briefly, the CDM, so this is an ISDA project. It started about 3 years ago, the common domain model. Very, very briefly, and doesn't do it justice, it's a model to represent life cycle events and the trade components in a standardized way. If I was talking about this about 18 months ago, I'd say this is an ISDA product. ISDA initiated it, but we're working with other trade associations now. It's kind of gone beyond ISDA, I suppose. And the last 12 to 18 months, we've been looking at how to apply the model to regulatory reporting. And this is how the relationship between the RTS and data standards is being consumed in the CDEM. So obviously we have, if we take a NIRS consultation paper recently, earlier this year, as an example, so they've looked at things like ISO, they've looked at the CPM ISCO standards, the CDE, UTI, UPI. This is all very welcome, and it's great to see that these standards are being put into the regulations. But we still have this problem of how the rules are implemented. So if we look at every time there's a new rule that comes out, whether it be a change or a brand new regulation that comes out, we'll see that the industry discuss the rules on forums such as the ISDA forums or the FIA forums or whatever trade association, the IA. We agree on various standards and best practices, and we produce these wonderful flowcharts and Word documents and Excels. But each firm still has to implement those rules separately, and as a result, the way that each firm interprets and implements the rules does differ. So what the CDM is trying to achieve is a model which can address this. We start in the same place with the industry discussing the rules, come up with those best practices and flowcharts and scenarios, but we represent the output of those discussions in a digital format. So it's not in Excel anymore, it's in a digital format in the CDM, and that converts the rules into code, and it's a machine readable and human readable code. So it can be used by technology, by lawyers, by compliance, by operations. And those rules are expressed in a totally unambiguous way. And this code is going to be made, the CDM already is open source, but the code will be open source and free to use. So you'd have a situation where firms can map their own trade data to the CDM standard. And as long as you've got two firms using that CDM standard, they will match because you've already represented the code in a single way. The question often comes up, oh, that means I've got to map my data to the CDM. Yes, you have, but you have to map your data to the EMIR reports anyway if you're going to generate an EMIR report. So what we're doing is you map it to the CDM then does all the eligibility checks for you and populates the fields as necessary. And you've got a standardized industry agreed way of representing. So I say this is an ISDA standard or an ISDA started standard. We're looking at other trade associations, but there's actually a project which is just starting up at the moment, and that is to represent the EMIR refit rules as code. We're looking to complete it next year, summer next year. And what's interesting is it's actually generating a lot of interest from European regulators. We've been speaking with various national competent authorities and ESMA as well. And in the UK, we've been speaking with the regulators here. Now, we're not quite at the stage where the regulators are putting the CDM into their rules, but they can certainly see the benefits, both to them and to the industry. And we're hoping that we get the participation from regulators. We can ensure that the CDM will be an accurate representation of the rules and you could say de facto a standard for EMIR refit reporting. But this doesn't stop at EMIR refit. We're also looking at CFTC, which published their rules only last week. We've carried out use cases for MiFID and Singapore reporting, and we're also considering how we can use it for SFTR. So again, it's not just limited to derivatives. So again, I'm conscious of time. I could probably talk about the CDM for a long time. I mean, this is it's not a regulator-backed standard yet, but it is, as is often the case, it starts with the industry with an idea. It gets momentum. We are getting regulator interest, and we do hope in the future this could be a way of representing rules. So the regulators will write their rules as they do now in legal text, but concurrently represent it as code. And in this model, we can ensure that the implementation is a lot quicker, a lot cheaper, and a lot more accurate, rather than having these 18 months, 2 years implementation periods.
Okay, thank you, Andrew. So there's a delegate question that has just come in, and I think this one is for you, Emma. The question is, will the update of the ISIN standard mean that the firms will have to change their, what is called here, a derivation logic? And especially thinking about the case of cash and physical as it applies to derivatives.
So that's with regards to the CFAI change, not necessarily the ISIN revision, because on the CFAI and within OTC derivatives, the cash and physical for a certain asset class is changing. But we're looking at the analysis now. With regards to the ISIN revision, there's not expected to be any downstream implications. Nothing's changing with regards to the assignment rules, etc. There will just be a couple of additional fields that will be made available. With the CFAI change for OTC derivatives, yes, there are expected to be downstream impacts. We know there are a portion of OTC ISINs where the classification is no longer compatible with the 2015 is not compatible with the 2019. So there will need to be most likely new ISINs generated there. But again, the volumes we'd currently picked up on that were quite low relative to the larger ISIN volumes. And that I'm pretty sure that the cash physical field is just a name change. So there's not going to be a change to the data. So given it's just a name change, it will still be a change, but it won't impact the ISIN.
Thank you. Andrew, you mentioned the IOSCO CDE work. There's also the UTI, which is a new ISO standard, which has been published a couple of days ago. So it's now not only a CPMI IOSCO guidance, it's also a new ISO standard. What's the relationship there with the RTSs that we just talked about, or what have been the challenges in adopting the UTI so far? And will the fact that it becomes a new ISO standard make a change?
So Yeah, so obviously the CFTC and EMIR, when they published their consultation papers, they talked a lot about the CFAI standards, and we certainly do welcome any introduction into the regulations as they're anyway. And I'm sure across the board we welcome that sort of introduction to the regulators themselves. It will speed up a move towards industry-wide adoption. When it comes to things like the CD, I'll get to the UTI bit in a minute, but when it comes to things like the common data elements, a lot of those fields are. It's great to have standardization between regimes. What we need to have caution with is where regulators think, oh, I'll just tweak it a little bit. As soon as you tweak a standard, it's not a standard anymore. So we saw that a few times in the consultation papers, not too much, to be honest. So that's good. But the actual UTI, again, introducing this into the jurisdiction requirements is fantastic. Again, just a word of caution, until all jurisdictions have adopted it, we may well see instances of separate UTI logic, global and legacy logic of UTIs, and this could make the exchange of UTIs problematic with firms having to work out what UTI gets used and where during different periods when the UTI is implemented across various regimes. So, again, I welcome it. I think it's a great thing. I want to see it across all regulations. It brings global standardization. The road to it may be a little bumpy as we get there.
Okay, thank you. Somebody wants to add to that in the context of the UTI standard? And if not, then we can probably, in the last minute that we have, there's also a new standard for which the development is starting, and which is also coming from a requirement from the IOSCO work. So again, on the derivative space, so a new standard will be developed for the unique product identifier this time, so the UPI. What will be the timeline for that? I think maybe Emma, you can give us some information there.
Yep, great, thanks, Paul. So yeah, the UPI, the unique product identifier, it is part of that package of G20 reforms that resulted from the financial crisis. So that included the LEI resulted from that, the UTI, critical data elements, as Andrew mentioned, and then the unique product identifier. So the unique product identifier is really specific to facilitate global aggregation of OTC derivative data and to increase then transparency for the supervisory authorities in financial markets to mitigate systemic risk and protect against market abuse. Now, in October 2019, the FSB published their governance framework related to the UPI system. For those who are not aware, so the Derivatives Service Bureau, the DSB, has been designated as the sole UPI service provider, and we will be responsible for implementation of the UPI. Now, within that October report, the FSB have made the recommendation for jurisdictions to make the necessary adjustments to their rules and regulations for implementation of the UPI by Q3 2022. So the DSB is currently working with the FSB with regards to the implementation and the expectations, and we'll be providing some more information to the market shortly. But we are working on that timeline with the FSB to ensure that we can meet the deliverable. And as Andrew touched on, the CFTC rules were adopted last week, and that does include having UPI within their mandate under Article 45, I believe. So we already have one jurisdiction who is, mandating and ready to go with the UPI. And on that basis, the ISO standard, as you said, is also being developed. That started in June, and the expectation is for the standard itself to be published by the end of 2021, given the working group is working quite fast on the outcome of that. So all exciting things, but what we need very much is for industry preparation and readiness to expect the UPI coming in. We're leveraging, where possible, the OTC ISIN system, because the UPI is a subset of the OTC ISIN data. Therefore, there is a natural hierarchy between the two. So we will see how things progress, but hopefully, given the connectivity and infrastructure already in place with market, that will help adoption be as seamless as possible.